Hey, folks, Dave's going to grab us here in just a second. We'll be going live with him.
5.7 Highlands Light FM. That's Kelly Clarkson. Hi, my name is Morning Dave. It's 8:40 here, 20 before 9. It's one of those days of the week I don't look forward to in terms of finances because right now with the atmosphere we're in, I really rarely have good news when we get toward the employment end of the week. Time to check in on your money. And we will give you the greasy news. Let's go downtown and talk to Phillip Statler at Statler Financial Services in downtown Sebring. Phillip, good morning. How you doing today?
Good morning, Dave. How you doing? Well today. Stuck at the house for a little bit this morning, but it's a good day. It was kind of brisk outside. It felt good to be outside this morning.
Actually, it was. It was kind of nice. I've got to admit, I've been riding my bike back and forth to work in the afternoon. We start getting these 20-mile-an-hour wind gusts. I kind of got to downshift 2 gears from normal in order to get home. It's, whoa, I get my cardio. I'll give you that. Weather is nice, though. I mean, we're getting the happy talk out of the way because we start out the morning with the Thursday morning first-time unemployment claims. And that was what I was alluding to at the top of this thing. 2.98 million more people thrown out of work the week ending on May 9th. Yesterday, you and I were saying if it's better than last time, it'll be a good thing. Well, it was better than last time, but the green eye shades were expecting better than that, weren't they?
Yeah, they were, and I guess when you and I talked yesterday, I misspoke because the traders are not liking that number. The Dow has actually gone down another 50 points since the unemployment number came out, first-time unemployment claims came out. You know, depending on who's you looked at, but the guys I follow expected first-time claims to be at 2.56 million first-time claims, and they came in at a little over 2.9 million. Now, that was better than last week when we were at like 3.2, I believe, but not near what the economists thought it should have been for this week. And so that's adding pressure, continued pressure to our futures this morning.
Yeah, the things I was reading and we were talking about yesterday, that basically any improvement would be good. And I hadn't heard a target price per se. It is better than it was last week. But as you say, the green eye shades expected better than that. And we've had a couple, 3 times over the last few weeks in which the market has responded differently. And evidently traders on the floor were expecting something different from what the analysts were. This time they're in agreement. They wanted a bigger improvement than they got. And we're starting to look at more red ink. Yeah, setting the table from yesterday, it was a crappy day. We were down 517 points on the Dow, down 139 on the NASDAQ, and down another 50 on the S&P. I certainly wouldn't want to go out on a limb and say we're going back down and testing that low, but the last couple, 3 days certainly aren't pleasant days on the markets, are they?
No, they definitely are not, Dave. You know, I think that we continue to talk about uncertainty, and I think, you know, Chairman Powell kind of added some more uncertainty yesterday to the markets, and I think that's probably what we're seeing right now. Because yesterday, you know, up until lunchtime, don't get me wrong, the market was trailing down, but it was going down very, very slow. It was losing its steam. But after Powell started his talking, man, the markets plummeted as he said that basically that this recessionary time period is probably not going to be a V shape like you and I keep thinking we were hoping it was going to be. He's talking about it being a U shape, meaning that we're going to be in this recession for a longer period of time than we anticipated, and it's going to take us a little bit longer before we start moving out of it. And so, meaning there may be more stimulus that has to occur to keep us from going into that depressionary area.
Absolutely. The exact words he used when he was on the rubber chicken circuit yesterday was, quote, the recession is, quote, without modern precedent and significantly worse than any recession since World War II. And yeah, he's sounding like a Democrat saying we need a lot more stimulus in order to bail this sucker out.
And that is not what the traders wanted to hear. And so that's why we saw the fall off yesterday. And since the jobs number didn't come in quite, you know, the unemployment number didn't come in quite where folks wanted, we are starting to fall faster.
Absolutely. It's not looking particularly good this morning. Another macro figure that came out, isn't helping it a bit either. Normally, lower prices are a good thing, but when you expect when we're in a time like this, lowering prices means a loss of demand. Import prices into this country fell 2.6% last month. And they were expecting something a little bit different from that on the green eye shade front as well, weren't they?
They were. They're expecting it to drop about 3.2%. So I guess that means demand may be a little higher than what they anticipated. But still, the demand is not there to go out and buy. Everybody is in the exact opposite situation. If I have money, I'm holding on to it. I'm not spending it right now. And there's a lot of people that don't have it that need it. And so that's kind of the two quandaries we have right now.
Understood. We've got a weird set of circumstances going on, which what would normally be good news is bad news, and bad news is, well, if it's not as bad, it's good news. We're in strange times. There are a few companies that are reporting their quarterly earnings, and it's always interesting seeing which industries are actually surviving this mess the best.
Here, let's start out with one that we would anticipate to be in pretty bad shape. And that would be the cruise lines. Norwegian Cruise Line reported their first quarter. They lost 99 cents a share. That was almost double what they were expected to have lost. They did revenue was basically in line with what everybody expected it to be. And I like this statement here. It gives me some kind of reassurance on Norwegian being around for a while. The cruise line said that they're well positioned to withstand 18 months of voyage suspensions. So that tells me they can go 18 months before they have to have a ship full of people leave the port.
Now,
I think that's a good thing, Dave.
I think it is, having the liquidity, being able to do that. They aren't saying they're expecting 18 months, are they?
No, they're just saying that they could handle being without cruising for 18 months. Now, obviously, that big of a miss is substantial for them, and it's putting a lot of pressure on their stock today. They're down about 4.5%.
All right. I noticed that Carnival also is tanking this morning. Is that just sector, or do you have something on them?
No, they did not report earnings, but they did come out and say something. I saw a blur, but I can't pull it up right off the top of my fingertips here. But they were talking and putting out some numbers, and so I think that's kind of what's hitting them today. Is that they weren't giving good news.
Because between Fauci saying we're reopening too fast, Paulson saying this is a bigger mess than we expected, some of the just dis-ease over the thing, I'm looking at it, virtually 80% of the big losers I got this morning are in the travel and hospitality industry. So,
here's what I got. Yep. Carnival says that they are they're laying off folks, they're furloughing folks, and they're cutting salaries at this point in time. So that's what's hurting their stock this morning.
Okay. You got some other news?
I do. I got Cisco Systems. They actually had a profit. Well, I mean, they had a profit, but they actually beat expectations too. They beat by 10 cents a share. Revenue top forecast. And I like this one. They gave upbeat current guidance for the current quarter. Obviously, people working from home is helping Cisco Systems. They're up about 0.8% this morning. So they're doing well. And I think I got two more, Dave. I've got Smile Direct. Oh, you remember when Smile Direct, when their IPO came out, it's been within the last 2 years, I think.
I'm trying to remember, yeah.
They lost 28 cents a share, and that was more than expected by about 11 cents more than expected. Their quarter was obviously hit by all this other stuff, and they got downgraded by Bank of America. That's not helping them at all. They went from a buy to an underperform. That's a pretty big change.
Now, that's like two categories down, isn't it?
Exactly. Yeah. So they're trading down today about 7.4%. And then the last one I have is the restaurant business again. Let's go to Jack in the Box. And they came in 16 cents below expectations. They still had a 50-cent profit per quarter, per share. Revenue beat the forecast also. Same store or same restaurant sales were down 4.2%, which you would expect that given where we are today. They withdrew their financial guidance and they suspended their dividend and their cash and their share buyback program. And they're down a little over 5.5% this morning.
Yeah, kill the dividend, kill the share buybacks, and miss the numbers. Well, that sounds like a trifecta to me, doesn't it? You?
Yeah, exactly. Yep, trifecta for the down stock day.
Pretty much. Setting the table again, down day yesterday on Wall Street. It looked like it was going to be modest down starting the day out this morning, but I'm looking at my delayed quotes, and it's obvious the traders were not happy with the unemployment report this morning. 45 minutes early, where are we going so far?
Yeah, it's been a continual decline. And when I first looked at these about 4:30 this morning, we were split. Actually, the Dow was red, everything else was green. Obviously, now we have gone to everything green and everything red and drastically red. We've got the Dow down almost 1.4%. That's $321. We've got the S&P 500 down 1.1. That's almost $32. And we've got the NASDAQ down 0.9%, $81. So everything's going to open up to the down and significantly down. So, but the commodity side is all green this morning. Imagine that, Dave. Silver's up 0.4 to $15.73 an ounce. Gold's up almost 0.7 to $1,727 an ounce. And we've got crude oil back up over 25. It's up 2.3% this morning to $25.89 a barrel right now.
Alrighty. Overseas markets, Asia was off a little at the close early this morning. Europe is looking at our situation and saying, get me out of here. They're all down by like 3% this morning over the European markets. Phillip, this is probably a good reason to look at your retirement account right now because we haven't tested that bottom yet. If you haven't shifted into the safe investments, you might have a little time. How do I find you to get that arrangement?
You're exactly right, Dave. You know, now is an opportune time. I've been telling you that for the last 3 weeks that this market's been going up. Now's the time to make sure that you don't have too much risk and that you reallocate your portfolio. I mean, that's what we've done to all our clients' accounts. So now's the time. Give us a call at 863-382-0037 to schedule your financial x-ray to determine how much risk you have in your current portfolio. See if you need to maybe lighten up that risk a little bit. Hey, and then follow us on Facebook. All you have to do is search Statler Financial Services. We'll come right up. Follow our page there where we repost our morning broadcast with Dave there every morning. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 7:30 a.m.
And then back here again tomorrow morning. Hopefully we're about due for a green day tomorrow. Phillip, I'll see you then, all right?
All right, man. You have a great one.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, man, let me just share with you that I'm thankful for you and you continue to turn in and kind of listen to what we're doing. And I appreciate that. If there's any way that we can be of help or service, that's our goal, is to help our community. Give us a call at 863-382-0037. Let us be your sounding board. All you have to do is call, schedule a 15-minute consultation. It's that easy, folks. Do it right now while you're thinking about it. 863-382-0037. Have a great one. We'll talk to you soon. Bye now.